Well, hello and welcome. And on today's video, I'm going to be talking about the financial planning and analysis for digital agencies. And I'm going to break this presentation into three topics. The first being kind of a general overview of our TCA planning process and how we apply that in the digital agency space. And then I'll be talking more specifically about analyzing income earnings from the standpoint of what we call EBITDA, earnings before interest, taxes, depreciation, and amortization, and talking about profitability key performance indicators. And then finally, I'll wrap up with talking about how we bring that into analyzing cash flow and how we talk about specific cash flow key performance indicators. So yeah, excited to be able to share this with you here, and I'm going to get started with our planning process for TCA, which is the process that we use across multiple industries, but we of course then would tailor it specifically into the digital agency space and specifically for the company that we're working with. And so generally the way we look at the process is it starts by developing the key performance indicators. So we look at the historical results of the company and we work with the company to identify what are the most important key performance indicators that can be calculated off actual results. How can we distill the actual results down to these key performance indicators that are really meaningful and yet efficient for company leaders and managers to use in operating the business. We then take those key performance indicators and we set targets for what we call the plan. So really it's about planning. It's saying, okay, well, we can measure key performance indicators after the fact, but now that we know kind of how to do that and how to get meaning out of it, let's use that to do planning. Let's set KPI targets that we're trying to achieve. So we work with our client to set KPI targets, which starts the foundations of their plan, their business plan as it is in a financial model or the financial modeling side of their business plan. We then use those key performance indicator targets to forecast results for profitability in more detail. And so we take the key performance indicators and then we use that to drive a more detailed forecast of income. And that detailed forecast of profitability and income would be in a format that essentially matches the accounting system or the accounting process, so that later there can be actually a measurement of actual to plan. What did we plan for? What actually happened? What's the difference, kind of thing, right? That variance analysis. We also do the same thing with regard to cash flow itself. So we go beyond just forecasting KPIs, placing KPI targets, and then driving that into an overall forecast of the details. We also do that for cash flow. We have cash flow KPIs, which we are setting targets for, and then we're using that to create a full planning model that not only gives us a plan for profitability and income, but gives us a plan for overall cash flow. Once all that's in place, then we can start, as the months roll on, we can start measuring actual results against the plan. So we can look at that both at the detail level. We can look at actual account by account in the general ledger, so to speak. We can look at what was the plan and what actually happened and what was the difference, but we also do that at the KPI level. So we go back up to the higher level and say, well, these are the KPI targets we were trying to achieve, whether it's sales per day or profit margin or a gross margin or number of quantities produced in a day, or whatever those profitability metrics might be. We're going to be able to compare those to what actually happened, the targets to what happened, and then look at the differences there. So it's a holistic system of looking at both KPIs and looking at specific financial details that are in the financial statements and connecting the two. Because one of the things that I often find is working with companies is that they often already have KPIs, or they have something like KPIs in their gut, especially if they've been operating for a while. They have operations leaders who have metrics and ways of determining their efficiency and their profitability, but they're not connecting those metrics into the actual financial statement. So nobody can really show you in mathematical detail how those metrics actually affect the income statement that is being presented in the financial statements, for example, or the actual cash flow that's ultimately presented in the financial statements. And it's like we know there is a connection. For example, if we have a KPI that is if we're charging by the hour, right, for our services, and we have a KPI that is how many hours did people work as a percentage of the total hours we paid them. If we have a metric like that, we know that the higher number of hours people work, if we're charging by the hour, of course, we're more profitable. But if we're tracking that metric and then not tying it actually back into the financial statements, there's kind of a broken link there in terms of understanding the holistic picture of, well, exactly what was the sensitivity to overall profitability from a financial statement perspective? What was the sensitivity there to something like an individual's number of hours worked or billed or whatever kind of thing, right? So that's what I'm getting at in terms of having KPIs that are actually integrated with your financial statement process and using it that way in the model rather than having kind of operating KPIs that are somehow segregated or being done in isolation of the financial statements. Ultimately, no matter what though, the plan belongs to the operation leaders. We're here to connect the planning to the financials. That's really the technical expertise that we can bring to the table a lot of times, is that we can't make your plan for you. Essentially, we can advise, we can provide anecdotal observations based on what we've seen other businesses in your industry are doing in terms of their planning, but ultimately you have to own your business plan. Our role in working with you or with a potential client on something like that is to help take that plan that you have and model it financially and connect whatever operating plans or KPIs you have to your financials. Okay, well that's the TCA planning process in a nutshell. Ultimately the analytical questions that we're looking at are boiled down to very basic things. And so I'm going to show you here an example on the screen of a kind of sample forecast and kind of stare at it for a second, and then I'm going to kind of pose this analytical question, which I think is really what I would call the bottom line question that we're always driving toward. So what you can see in this chart, it's very basic. We there would be a lot of details that come before this, but this is what I would say is the bottom line, right? I call this working backward from the end, right? And really what ultimately matters to any operating business is cash, right? Cash flow. How much cash flow do we have available to invest and grow this business? And so I'm calling this working backward from the end, because we're going to take, when you look at this chart and you see we've got cash ending as the last line item here, that's essentially what all of our modeling is designed to do. We have a more complicated model that would come above this, and you'll see pieces of it throughout this presentation, but it all is designed to drive towards this cash at the end. And so cash at the end is a function of the cash at the beginning and the cash flow. And when you look at this, it leads to one basic analytic question, which is, well, when you're looking at that chart, why did cash only marginally increase in February and then it jumped substantially in March, right? So that's kind of the question, right? Is like, well, if we're planning cash flow, how do we understand these changes we see in cash flow? And to get into that question, I would propose that what is driving those changes in a very kind of high level academic way is, well, the changes are being driven by changes in your income, your earnings, your profitability, and changes in your cash flow process that is aside from income, like how quickly you collect from customers or how quickly you pay your vendors or whether you're obtaining loans and things of that nature. So that's what we'll get into next. In our next video on this topic, we're going to talk about analyzing EBITDA and the profitability metrics, key performance indicators for earnings before interest, taxes, depreciation, amortization. That's what I mean by EBITDA. We're going to tackle that in the next video. So that's it for now. I'm going to leave you here and hope you join me for the next video on this topic of digital agency financial planning and analysis.